Good afternoon, everyone. Thank you for joining us at Mortgages for Business in Kings Hill. Thank you to Glenn, who's helping me out on the slides this afternoon, and also thank you to Jenny, who's prepared all the slides and the spreadsheets. So my name is Andy Elley. I'm the head of the commercial department at Mortgages for Business in Kings Hill. Today we're going to have a look at a webinar for financing a bed and breakfast or a hotel. We're going to run through the slides. Can I ask if you have any questions at the end, please do drop them on an email, and we will then pick those up at the end of the webinar and attempt to answer any queries you may have. Commercial Mortgages for Business, we have a team of 8 commercial consultants in total. We have Paul Keddy at Mortgages for Business Kings Hill, 35 years plus experience as a relationship director with RBS. Paul's been with us for 4 years at Mortgages for Business and is very experienced. Gareth Richards, also at Mortgages for Business Kings Hill. Gareth's the head of the intermediaries, looks after the broker inquiries that come through. 8 years at Mortgages for Business. He can also help with these guest house and hotel inquiries. We also have Glenn, Steve, and Assad. Steve Bedford, in his late 60s, 35 plus years business banking experience. And we also have our Wilmslow office, newly joined 8 months ago, Robin Tate, who is a commercial manager with NatWest Bank. He's financed a lot of guest houses and hotels, an experienced guy. John Kennan, again in his 60s, 30 plus years of broking and business banking experience. So between us, we are usually able to find a home for your mortgage inquiry. A little bit about myself. I've been at Mortgages for Business for 5 years now, and I joined Mortgages for Business from Christie Group. I was a finance consultant at Christie Finance. And Christie & Co., as many of you may be aware, they can finance hotels, guest houses, restaurants and pubs, and they sell a lot of trading businesses. Whilst I was at Christie's for 10 years, part of my role was not only writing the finance applications for people buying some of the properties from Christie Group, but also to inspect the hotels and the guest houses and the pubs, to meet the owners, to have a look around the property. And over those 10 years or so, I really did get to see the good, the bad, and the ugly when it came to guest houses and hotels. And I've probably viewed over 100 hotels over the last sort of 15 years or so. Moving on to the blog then. So with the blog, what we're looking to do today is to see how much can you borrow, what sort of support you'll get from the lenders, do you have the required experience, and what's the starting point for someone that is purchasing a hotel or guest house. It may be for the first time that they're doing it, and they really need their hand holding through the process. So we're going to move on to slide 1. Which tells us just a little bit about the UK leisure industry. There's lots of bullet points on there, and I'm going to run through a few of them. First of all, is the amount of foreign visitors that are coming into the UK. So last year, I understand there was 40 million foreign visitors per annum. They were spending up to 25 billion throughout 2018. And it's definitely helped that the Brexit situation with the weak pound, people traveling from the continent, from France and Germany, they get a lot more for their euros. So therefore, they have greater spending power, and they are flocking into Britain in their droves. Also, on the flip side, UK holidaymakers, it's a little bit more expensive to go abroad now. So what's happening is a lot of people are, staying at home, and they're maybe going to a hotel or a guest house or Premier Inn and spending more in the UK and maybe not travelling abroad quite as much. Revenue per annum per room, RevPAR, it's increased. In 2018, it increased by 0.6%, and then moving through into 2019, Christie Group have reported that could increase by another 0.7% in total. And in London alone, 80 new hotels looking to be opened in London, 10,500 rooms across London. Now that's a huge investment by some of these operators into the London hotel stock, and they're doing it for obvious reasons, and maybe because of the people traveling from abroad to the UK. Hotel prices as well. Generally, to some degree, the guest houses will follow the increases in house prices. Hotels and guest houses, they have increased in price over 16% in the last 3 years. That shows there's a lot of people diving into this sector and are buying these properties. The prices are increasing, which has to be a good thing for anyone that's looking to purchase a guest house or a hotel. So we're going to move on to slide 2, which is basically bed and breakfast or hotel. And then it just gives a few pointers there about the potential experience that a lender might need to see. So for a guest house, B&B, small guest houses, no experience required, albeit if you do have some business-related skills or you have some experience in the leisure sector, or you worked at a pub or a restaurant, that's all helpful experience. If you have financial acumen, you're of decent net worth, you've run businesses before, or you've had, your day job is, being quite high up the tree, then that obviously counts for an awful lot. When it comes to running a hotel, the lenders in particular, they do need a bit more experience. Running a hotel is hard work. It's often management of staff. You have to be sort of experienced in sector. A lot of people buying hotels for the first time, they may have operated a hotel, they may have worked at a hotel. We do see a lot of general managers of hotels. They're fed up making money for other people, and they are investing their hard cash into the purchase of hotels. Also with hotels, the key staff, that's a very important point. If you're buying a hotel, if you can get the CV for the key staff, the key sort of duty managers, that's often helpful. If you don't have too much experience running a hotel, sometimes you can have the director of your company could be one of the key staff of the hotel. They could be a minor shareholder with 1% in. You're then able to present their CV through to the lenders, and that holds a lot of credibility. So moving on to finding a suitable business and the research that you have to undertake. First of all, I'd advise everyone, if you're buying a hotel or a guest house, have a look at a few of the properties, make some viewings through the agents, and go and see these hotels. You can then pick out yourself, the good, the bad, and the ugly. October to December is best. So at the end of a summer season, the existing operators, they've had their summer trade. They may be thinking about they're selling their property or they're retiring. So October to December is when a lot of hotels and guest houses will come to the market, and you can have a good natter with the agents within the commercial offices of the business transfer agents. They will have a good idea over the summer period about people that have made inquiries to sell their hotels in the near future, and if they know that you're going to be purchasing a property, they could put you towards the top end of their list. If you keep in touch with these people, get advice, get experience, get details of their experience. So where to look? Where do you want to run your guest house or your hotel? So it's advisable that you try and stick to an area that you know. So for example, if you're situated in the southeast, you might not want to be buying a hotel that's located in the Highlands of Scotland. Pick somewhere that you know and kind of stick to that. Also, if you've got family within the region that you're looking to buy the hotel. So, for example, you're located southeast, you're purchasing in the West Country. If you've got family in the West Country, then that's often helpful. They can muck in on some shifts and help you out. So you need to have another look at what type of hotel or guest house that you're looking to purchase, whether it be a budget hotel, whether it be a boutique guest house, have a look at a few properties and make a decision of which sort of business that you want to go for. Profitability of some of the guest houses and hotels. Well, if you take somewhere, say, for example, in a 12-bed guest house in Brighton, turnover 220 to 240,000, you're going to make probably about 50% adjusted net profits. That business makes £120,000 per year. Whereas if you looked at a hotel which had sort of a net turnover of say 400,000, it's going to be a lot harder to manage, but the profitability, you're only likely to spin out about sort of 25% adjusted net profits. That's a kind of an industry average for running a hotel. Again, if you register with the reputable business transfer agents, that's always helpful. So you've got the likes of Christie & Co, Savills, Knight Frank, and also people like Countrywide. Countrywide often have guest houses located within their website. Another good source for finding businesses is somewhere like Dalton's. Dalton's have a website. Businesses to avoid. Particularly in the guest house sector, if you're looking to borrow sort of quite high loan to value, sort of 60 or 70% against the guest house, avoid the guest houses with lower profitability and lower turnover. A lot of the guest houses, you may be aware that the VAT registration limit is £85,000. You have to pay VAT after that point in time. So a lot of the guest houses, they might only produce sort of 40,000 of profits, and that has an impact on the debt serviceability of the commercial mortgage that you need to take on. So moving on, narrowing the search. When you're looking for the properties, take a look at TripAdvisor, because that will give you a good steer as to what the guest house operators or the hoteliers guests have how they've reviewed their services. Another key point now about narrowing the search: if you're traveling a long way to view the hotel or the guest house, then ask to review the accounts first of all before you travel 100 or 200 miles to view the guest house. That's a really good tip. A lot of the owner operators, they will only release accounts after the initial viewing. And in all fairness, some of the agencies, details of net profits that are produced by the business might not be completely true. So get the accounts, check those out. When viewing the property, see if the owner can show you around the hotel or the guest house rather than a key member of staff. That way you can find out a bit more about their business. What are their plans in the future? Are they looking to move? Why are they moving? How has the business gone for them? How long have they operated it? There's so much good information that you can get from an operator. And when you're trying to find a suitable business also as well, do not discount purchase of leasehold businesses. If you're a first-time operator, your cash is a little bit limited to put into the deal, then view some leasehold guest houses where you'll pay a premium for the lease, maybe a couple of times the adjusted net profits of the business, and then you'll pay an annual rent. With the search engines with the agents, always filter leasehold acquisitions as well, because quite often people are trying to sell the leasehold of their business because they've been unable to sell the freehold. So although leasehold may be the way forward, you could have an option on that freehold in the future. Also, when you're having a look at the properties, review the local competition in the area as well. That's absolutely key. Give you an example. I was talking to a client who was looking to purchase a guest house in Tunbridge Wells recently, and then we started having a look round, and then we realised quite quickly there's been an old office block near the train station in Tunbridge Wells, which is being converted to a Premier Inn. And quite obviously, if you've got a big operator coming in with cheap rooms, you're gonna think twice about actually purchasing that guest house in that location. So do your research on that. So zooming in on a particular establishment, so review the sales particulars and the accounts of the business. Look at the net profits of the business. How does that stack up? As I said before, guest houses will produce around about 50% adjusted net profits if they're running well. Hotels about 25% adjusted net profits. Look at the profit and loss account. Now, bear in mind with the profit and loss account, accountants have generally probably done a good job trying to keep the profits down so that the owner's taxation is a little bit lower. So you can add back the following to adjust the profits on the accounts. You can add back owner's remuneration, directors' remuneration, pension contributions for the directors, for example, if they were running a large hotel chain and contributing towards their personal pension. You can add back loan interest. That's obviously, if that's detailed on the profit and loss account, that is an add back. Depreciation, outstanding HP or asset finance can be added back in, because quite often when the hotelier will move on, or the guest house operator will move on, sell the business, he will have to repay that asset finance before that business is sold to you. Unusual expenses can be added back in. You often see quite a high bill for motor expenses. You often see high repairs bills on a property. So, for example, if part of the property's had a new roof, you may see a high repairs bill on the profit and loss account. Add that back in to make the adjusted net profits. And the adjusted net profits are always what the lenders and the valuers will use when they're assessing the valuation of the going concern business or the property value. Also estimate your costs of purchase when you're looking for a business. So typically you want to be looking for between sort of 30 to 50% deposit going in. You'll have costs for stock. If you buy a hotel, you'll have to pay for that stock separate to the the valuation of the going concern business. You'll have legal fees. You may have to budget a few £1,000s. That £2,000 to £5,000 is quite usual. If you're purchasing a company by share transfer, you're buying the limited company, then your legal fees are going to be much higher, because the lawyers and the accountants will have to go through the whitewash procedure. Add in broker fees as well, typically between sort of 1 to 2% for the broker fee for the sourcing of the mortgage. Lenders fees as well will be, generally you can add the lenders fees to the loan account, and typically they're going to be running out about sort of 1 to 2%. Stamp duty is a big bill as well. So if you've got a property over £250,000 of value, then you're looking at 5% stamp duty on that sort of figure. So that can be quite expensive. Stamp duty, when you look at that, you probably want to pay the stamp duty against the freehold value. You don't want to be looking to pay the stamp duty against the goodwill of the business. But that's something that your lawyer, someone experienced in conveyancing for hotels and guest houses, will be able to give you a steer on. So moving on, legal considerations. Okay, so you'll need to obviously check with solicitor. The solicitor will have to look at sort of land registry searches, local planning searches, rights of ways, easements, etc. Another important point is fire safety, that's all in check. That's been checked by the local fire brigade recently. Disabled access, that's absolutely key. If it's a guest house with 10 steps leading up to the front door, you want to see, whether the owner of that property should have put in some, disabled access so people can get access to that property if they're, say, wheelchair bound. Transfer of undertakings as well, that's a key point. When you take on a trading business, a lot of the staff will have contracts of employment. You're purchasing that business, you are expected to take on those staff. Admittedly, after a period of time, some of those staff may leave the business, but it's your responsibility to take on those staff. Those staff have employed for a long time. If you ever had to make redundancies, that could cost you a lot of money. So it's always worth looking at the transfer of undertakings. Personal and liquor licenses, obviously they need to be put in place. Check out the food hygiene ratings if there's a restaurant within the hotel, to see what sort of grading they've been given. Another point for the purchase of a hotel or a guest house is the capital allowances. Quite often, there's a lot of capital allowances tied up within the building. So, examples of fixtures and fittings, heating, ventilation, door handles, anything that's been sort of reclaimed. Now, a lot of owner-operators of guest houses and hotels have never undertaken their capital allowance surveys. What that could mean for you is that if you're buying a very, very profitable business, that you could get a certain amount of tax relief on those allowances that have never ever been reclaimed. So do check that out. If you just Google capital allowances, hotels, and guest houses, you'll find a raft of information about that. Specialist insurance you'll need to consider: business insurance, public liability insurance, etc. Another key point as well is asbestos surveys. It's always worth checking with the operator whether they have a plan in place. Every business should have an asbestos plan in place, and you'll find that a lot of these operators do not. And before you complete on the sale of a guest house and hotel, you probably have to undertake that asbestos survey, which could be an additional cost to you. So we mentioned before, stamp duty, 5% of the freehold value. Share transfer as well. If you're buying the company that owns the asset of the business, then the share transfer fees, I think, are 0.5% at the moment. So it's a lot cheaper to purchase a business by share transfer. But of course, you do take on all the undertakings of that company. For example, if the company hasn't paid their VAT or there's bad debts in the background, you take on all that liability. That's why it's so important with solicitors to get that, get the whitewash procedure checked properly. VAT registration or VAT on purchase. If you're trading above £85,000, you'll need to be VAT registered. Maybe a flat rate operation for a guest house operator, maybe sort of 16%, something of that sort of order. If you're purchasing a hotel where there's VAT on it, you'll also have to pay your stamp duty on the VAT element as well. So do check that out. That can be quite a nasty surprise at the end of the transaction when you've got to realise that you're buying a £2 million hotel and you've got another 5 to 10k of stamp duty to pay. So moving on, making an offer for a business. So as I said before, view lots of properties, find something suitable, find something that you can work with and you think you can make a go of. Make an offer on that property, subject to the full business appraisal and valuation. And you are also welcome to make that offer subject to a structural engineer's report on the property. A business appraisal and valuation structural engineer's report, if that takes sort of 3 weeks to turn around, often it is a really good negotiation tool to leverage down the purchase price, particularly if the structural engineer points out any sort of faults within the building. Make the offer as well subject to the business valuation, and make the offer in writing through to the business agent or to the owner of the property. So moving on, so preparing to get the finance. You have to have a think about whether you borrow in your own name, sole trader, partnership, limited liability partnership, or limited company. One pointer there, if you're a higher rate taxpayer, for example, you probably don't want to be purchasing that business in a sole trader name because you'll pay tax on all your profits. There might be a sensible idea to set up a company to purchase the property. Tax efficiencies are good. You'll pay your corporation tax on your profits, and you may be able to build up a little pot in the background from the profits of that company. Have a think whether you're purchasing the asset or whether you're purchasing by share transfers, previously explained. Write a business plan. It doesn't have to be 20 pages long, 3 or 4 pages with kind of a strengths, weaknesses, opportunities, and threats sort of summary. The business managers at the banks, they probably read the first 4 pages. They don't read the remainder. They'll have a look at the cash flow forecasts. So get to the nitty gritty on that, and that's obviously helpful for yourself and for the lender. Work out a wish list for the mortgage terms. Well, the lenders in the marketplace, and we've got access to 19, 20 providers for commercial mortgages for guest houses and hotels. The terms and their interest rates will all vary. So, for example, you may have someone that will write a 10-year interest-only deal. You may have someone that's got a 15, 20, or 25-year repayment profile. So have a look at what you need on the mortgage. One thing to bear in mind, if you say, for example, if you're going to a high street lender and you're you may be reaching retirement age, sort of 60 plus, then you'll probably be looking. You don't really want the mortgage for any more than 15 years on a capital and interest basis. But if you're a younger purchaser in your 40s, there may be lenders out there that might be able to offer you a 25-year mortgage, which might then be a little bit more sensible. Some of the lenders as well, they'll offer some, potentially if the property needs a little bit of refurbishment, then they may offer some interest only for 6 to 12 months, just so that you can bed yourself into running that business and, spend some of that money on some minor refurbishments to the property. So that's preparing to get the finance, and we're moving forward then to, in addition to the business plan and the business accounts, what the lenders is going to need from you. So we've prepared a little list here. So proof of identity, copy of a passport, and a driving license. If you can get those certified by a solicitor, or the main post offices will be able to certify documentation for you. Proof of address, likewise, that can be certified by a post office. Or if you meet in your broker can certify that for you, no problem at all. Proof of income, that's, if you're buying a guest house and you've got, say, for example, one of the other partners has a day job, then if you can provide P60 or SA302 returns, or even tax year overviews, that's often very helpful for the lender. If you can prepare a CV for yourself, which shows the key skills that you have, your management experience, any experience that you have in the leisure industry, that's more than helpful. A personal income and expenditure statement is required. Now have a think about this logically. If you're moving into a guest house, the likelihood is that your personal income and expenditure will decrease, because the business may cover a lot of your costs. It may cover your motoring costs. It may cover some of your gas and electricity. If you've sold a residential property to purchase the business, then you may have paid off all your credit cards and your unsecured liabilities and any secured commitments. So your personal expenditure document, if you put that in line with how your finances will look if you're actually running that business, that's more than helpful for a lender. A statement of assets and liabilities as well. So if you're a property owner, for example, we deal with a lot of portfolio landlords at Mortgages for Business, and we have a number that have anywhere between 1 and 90 properties. If you've got a list of your assets and liabilities, that will show the lender kind of your background net worth, which is helpful. So moving on to the mortgage application. We often start with these deals where we're emailed, the financial accounts for a business and the sales particulars for the property. As a broker, we'll have a look at the property. Does it make sense? We'll have a look at your personal situation, your experience, your character, ability, means, purpose, and do you have the right sort of skill set for us to be able to present properly to a lender? We collate and prepare the documents, and then we will submit an initial application. So as a brokerage, we will do a bank proposal document. We will write up the strengths of your application, and then we will present that to 7 or 8 commercial lenders to see what sort of deals that we can get for you. We generally need about 3 to 7 days for feedback, and we'll get some agreement in principles from lenders. Once we have these, we'll sit down with you. We'll have a review of what's come in, whether a lender can help or not. If they can help, what sort of terms and conditions they're likely to put on the mortgage for you. And then finally, obviously, before the bank produces the mortgage offer, if it's a sizable loan, in the main, you're going to need to meet with the lending manager for the bank. So at Mortgages for Business, we've got access to, as I say, 18 to 20 lenders. And the lending manager will meet with you. Often we accompany you to the appointment with the lending manager, and the bank manager will dot the I's, cross the T's, make sure everything makes sense, and then prepare his application to credit. Lending managers' applications, they can be 20, 30 pages long when they're sent into credit committee. We will have covered a lot of those points with those lending managers, and it will make it a lot easier job for them to present to credit. The lending managers that we deal with, you know, if they've looked at the deal and they're meeting with you, they want to do that deal for you because we've overviewed the case. The development manager at the bank has overviewed the case, and the actual lending manager himself is kind of going to make the submission for you. So the mortgage application, we're talking about valuing the bed and breakfast or the hotel. Well, there's a couple of methodologies for valuing guest houses and hotels. So with a guest house, the way that we'll look at it would be the freehold value, and then we'll take the adjusted net profits of the accounts for that guest house, and then we'll use a 2 or 3 multiplier for the goodwill. The two figures combined will add to the overall going concern value of the guest house. With a hotel, all hotels, they will be valued on the profits methodology. So, for example, if it's a big hotel in a city centre that's part of a chain, they might be worth 10 to 12 times the adjusted net profits of that business. Likewise, a smaller hotel that's independently run within somewhere like, for example, Tunbridge Wells, very close to us, then you may be looking at 8 to 9 times the profits of the business as the valuation of the going concern. The valuers as well will also look at market value going concern, which is the going concern value, market value 2 figure, which is often detailed in a valuation report. That's fairly close to sort of freehold value. Market value 3, so that's business closed, trade inventory removed, business not trading, sale of the property within 180 days. Obviously, the MV3 figure that's detailed within a valuation report, ultimately that's the lender's security. If everything goes wrong with the lending on that deal, that's the security that the lender has available. Well worth having a look. There's a big national valuers called Pinder's Valuers. They value an awful lot of trading guest houses and hotels and businesses. On their website, pinders.co.uk, they have a valuation specimen section, and you can download those from Pinders, and it will give you a really good idea about how a business valuer looks at sort of valuing a guest house or a hotel, or the methodology that they use, the assessment of profits, the reviewing the competition within the area. So do take a look at that. Well worth doing. Now, valuation undertaken takes 2 to 3 weeks to come back. Renegotiate with the agent if the valuation is lower than the purchase price. You're not always going to get the owner to accept a reduced purchase price, but if you've got a professional opinion in front of you, it's a lot easier to negotiate that purchase price. Often we find if there's, say, for example, a differential of say 50,000 over the purchase price to the valuation, that you might meet halfway. You may pay 25,000 above the valuation, and the owner of the property might come down 25,000 possibly. But it all depends on their circumstances, really. But do bear that in mind. So once the valuation is back, you'll have a look at the valuation report. The lender's real estate team, the business manager, will also have a look at that report. If everything is in order, then the lender will release the mortgage offer for you. Happy days. So moving on to the part of the mortgage application and the legal work. So the offer letter, valuation report, and legal pack will be sent to the solicitor who do all their searches, etc., etc. Some lenders may require separate legal representation. So not only do you have to pay for your own solicitor, you'll also have to pay for the lender's legal advice as well. Some of our lenders that we use, particularly the challenger banks, they may be able to offer a dual representation service where that solicitor that's on their panel could act for yourself or your company, but it can also act for the lender as well. It does save a few pennies, that's for sure. All the legal searches are undertaken, work towards the formal exchange of the contracts of the property, 5 to 10% deposit to go forward, and then to establish a completion date. Fair average for purchase of a guest house or a hotel is probably 3 to 4 months in total. I mean, we have completed deals in 6 or 8 weeks, but it depends on how good the solicitors are and how good the quality of the supporting documentation for the mortgage is. With a hotel, you'll need a formal stock take undertaken. You're buying the going concern business, but that stock comes at a price. A formal stock taker will value the stock the day before completion. You'll have to make a separate cash payment for that stock. Obviously, for a guest house purchase, you know that process is not going to apply. And then we move forward to the completion. There's generally a week to 2 weeks before exchange of contracts and completion. But some clients, particularly if they're buying in sort of January or February, they may have a long stop completion to sort of say maybe, for example, the beginning of March. But once exchange contracts, the deal is in the bag. So moving on to the lenders, mortgage rates and terms. As we mentioned before, you're looking at about best case scenario for the higher loans, for maybe something that's 50% loan to value, loans in excess of maybe £750,000. You're looking at probably about 1.99 plus bank base rate, making a pay rate of 2.74%. Fixed rates are available, 5 to 15 years can be available. One of the challenger banks that we deal with at the moment, they only add 0.20% onto their variable rate for a 5-year fixed. It tells me what the interest rates might be doing in the next 5 years. Mortgage terms, 15 to 30 years, approximately, something of that sort of order. One of the challenger banks that we deal with will look for sort of a 10-year interest-only mortgage. You can choose from interest-only, capital and interest repayment mortgage, or part and part. Generally, the interest-only options, they are only available from the challenger banks where their interest rates might be a bit higher, and you might be talking from around about the 5% mark. Capital and interest repayment mortgages are from capital and interest mortgages. You're looking at a figure of probably, as I say, from 1.99 over base rate, and it's the high street banks that mainly will do the capital repayment mortgages. Some of the building societies that we deal with, they are able to offer an element of interest only, typically up to 50% of the property value. For existing operators, for business purchases, you might be able to borrow 100% of the purchase price if you're an experienced operator buying a second business, as long as you've got enough equity within the additional business or you've got some supporting security to offer, and that the accounts show enough profits to service the mortgage. Mortgages for business, we have lenders that can lend in England, Wales, and in Scotland, but we don't have access to lenders in Northern Ireland. It is a bit trickier trying to find commercial mortgages in Scotland. Some of the challenger banks don't go into that neck of the woods, so Scottish guest houses, Scottish hotels can be a bit trickier to finance, albeit that some of them represent some really good value. So moving on to some examples. I've got 4 examples here. We've got a Tier 2 lender and a Tier 1 lender. So a Tier 2 lender, purchase price £500,000, experience in sector required. This lender will lend up to 75% of the freehold value. They won't lend against the goodwill, but 75% of the freehold value. To borrow £375,000, they are looking for adjusted net profits of only £28,000 to support that debt. Some of the challenger banks, they're lending 10 to 14 times adjusted net profits. A little bit risky, but if the deal is tight, the profits are low on the business, then the challenger bank could be the way to go. Of course, the interest rate there, we've got a rate of 5.75% in total. It's obviously significantly higher than the high street banks. Second 2 examples, a couple of high street lenders lending over 15 or 20 year term, 60 or 70% of the growing concern value, rates from 2.5 over base rate. Example 2 is actually a building society, 4.5% discounted for 3 years, 20-year profile, 40,000 of adjusted net profits to service the mortgage. Example 3 is a major high street lender servicing 300,000 of mortgage. They need between 60 and 78,000 of adjusted net profits to service the loan, which is quite a lot. Example 4, kind of stand out from the crowd really, high street lender, Tier 1 lender, up to 70% of freehold value they will lend. The loan we've detailed there is 300,000. Rates between 2.5% and 2.75% over bank base rate, up to 20 years available from that lender. Repayment mortgage £1,700. Adjusted net profits 32,000 to service that debt. That's a high street lender. If you compare that to example 3, where that high street lender is looking for between 60 and 78,000 of profits, you know, that really does stand out from the crowd, that's for sure. And they're a good lender to work with. So a few case studies, recent cases that we've written at Mortgages for Business. First case study is a hotel operator. I've financed these chaps 3 times over the last 12 years or so. The recent refinance was away from a high street lender. £2.5 million mortgage, sorry, £2.5 million hotel value, mortgage of £805,000 in total. Picked up a rate of 2.5 over bank base rate. The client only needed a 15-year repayment mortgage, and the arrangement fee was 1.5%. What was interesting to note with this deal is that the client, they used to, back 12 years ago, they used to own the leasehold interest of the hotel, and it was one of the big pub companies that owned the actual property, and they paid a rent to the pubco. When the pubcos were struggling, they were started to sell off some freehold operations, and my client was able to pick this one up for £1.3 million, and he was trading very well from that hotel. The going concern valuation was worth about £2.5 million, and originally we were able to get him 100% of the purchase price. But he has come back to me twice again to refinance that property. Case study 2, £95,000. Scottish guest house up in the Highlands. In fact, when we did the valuation of the property, we actually had to book a ferry for the valuer to go over and value the property. We had to go to one of the challenger banks for this deal. It was only low loan to value, 21%. Base rate plus 5 3/4. Term of loan 13 years. I mean, that was mainly down to the client's age. Arrangement fee 2%. We look at the next case study is one that I completed last year. This was for first-time hoteliers moving from the southeast down to the West Country. Experienced property landlords, high net worth, decent income coming through. But it was the first hotel that they were purchasing. £850,000 purchase price. Loan of 60% loan to value against the going concern. Profits of this business were about 70,000 from memory. Rates, bank base rate plus 2.5, 13-year repayment mortgage. I think that took them to about the age of 75 from memory. The clients sold that one on the basis they had children, but there was a absolutely fantastic swimming pool at that property, and the kids were keen to get there as soon as possible. Mortgage payments on that one £3,452 a month. Last one was it was an old care home, capital raising for a divorce settlement. Low profits on the business because the clients had been spending a lot on refurbishments. Even when we adjusted the profits back, I think we had about 30,000 of adjusted net profits, but we were able to pick up a loan of 240,000 at a rate of 6%. Interestingly enough, that rate from the same lender would now be round about the 5.15% mark, and that's probably a reduction of over 1% in the last year. Term of loan 10-year interest only, arrangement fee 1.7%, mortgage payments 1,220 per month. Mortgage costs, so brokerage fees. Brokerage fees between 1 and 2% of the loan amount. Mortgages for business, we charge a fee of 1% payable on the offer letter within 28 days. Some other brokerages charge more than that. Application fees at the outset, £499. Valuation fees, well, it varies. If it's a smaller guest house, lower value, then you might be talking £1,000 for a valuation. But if you're looking at £2 or £3 million, going concern hotel, then you're looking probably valuation costs in excess of £3,000 approximately. Other costs, legal costs, well, budget for £2,000 to £5,000. Lender arrangement fees, budget for 1 to 2% of the loan amount. Interestingly enough, just after this slide was produced, we've got a lender that has come in that can offer arrangement fees for zero, no no arrangement fees for the loan, which is great. But no doubt that they will ramp up the interest rates on that to cover the shortfall. We've already mentioned about stamp duty, 5% of the freehold value above 250,000. So mortgages for business, what do we do for you? Well, you know, we've worked hard over the last 20, 30 years to develop a lot of contacts within the industry. You know, 18 to 20 contacts. We only deal with the best business development managers, people that can get these deals written for our clients. So we've got good access there. Directly with the lenders, we deal with the top business development managers. The experienced lenders become business development managers. They're second to none when it comes to assessing a deal. Can they help? If we can get it through the business development managers, the deals are often handed off to the relationship directors to write the deals. If the business development manager says yes, then chances are 70–80% of the time we'll get that deal through for you. Mortgages for business commercial team, we've got 100+ years experience between us. That's an awful lot of experience. You know, I myself probably written over 20, 30 guest house and hotel deals over the past sort of 15 years. So we do know what we're talking about. And we can hold your hand through the process as well, and, you know, let you know about pitfalls and things like that. Also, our business volumes that we write with the lenders, it gives us some preferential rates and terms. So we do a lot of volume business with the lenders. We can negotiate those rates that would be payable. One example is that we've got one lender at the moment. We'll look at remortgage options, and sometimes they will cover the solicitor's costs for the client, and they will give contribution towards the valuation costs as well, and the interest rates are really low. So we get preferential terms. And we'll manage the cases from initial inquiry to completion. Not only do you have the consultant at Mortgages for Business handling your transaction, we've got a full case management team as well that will help out with the mortgage. Thank you to everyone for listening. We will be sending the copy of this presentation and webinar through to anyone that has registered as an easy reference guide. If anyone else has a question, if they want to, you know, email it through to me, my email address is andy@mortgagesforbusiness.co.uk. My direct dial is 01732 471 644, and any of the commercial team will be happy to answer any of your inquiries or queries. Thank you for all listening.